Hello and welcome to another episode of our market commentary from StashAway. With us, of course, our Chief Investment Officer from his home, Freddy Lim. Hey, Freddy, how are you?
Hi there. Hi, everybody. I'm doing well here. How are you, Philip?
I'm good as well. Still working on processing the reopening plans that were announced last week. But at least I guess we have a plan forward, even though it might take a little longer, right, before we see each other. But I think at least we have something, more concrete written down now, kind of how it's going to be shaping up, at least for us here in Singapore. There's a lot of things ready. We did get some good questions, of course, again, right? Which again, I encourage every listener to always feel free to post your comments or questions you have in regards to our videos down below, and Freddie and myself will actually go through them one by one over the next weeks in the different videos that we put out. So with that being said, Freddie, normally what we do is, and we'll do it today again, let's give a quick update on what's been happening, right? Obviously, the headlines lately have been showing a couple of different things. The WHO, obviously, because they had a meeting, a virtual one, that was been under fire from the US side, as well as from some of their allies as well, right? And I think this is where we can start with this, because actually close to here. And Australia is now getting the fire from China, right? A little bit. Maybe you want to go into that for a few minutes?
Yeah, it was a stage where presidency of China was expected to face a lot of fire. But I think he has diffused it quite well, given the circumstances. He's gone in and strongly vowed to share any vaccine that's developed out of China's experience. And that really helped. At the same time, there's some retaliation going on. So President Trump once again threatened this time to pull all funding from the U.S. on the WHO. That's quite a big statement. And then on the side, China's crossfire with Australia has threatened to not import barley from Australia. And this morning is talking about the next item, iron ore. There are small things in the grand scheme of things, but it's just to signal that the Chinese are annoyed with the Australians siding with the coronavirus probe about the initial handling out of China about the virus, and officials and the local authorities were sort of slow to react and maybe withheld information. So that kind of probe, right? So there's a lot of that going on, but it didn't really affect the market much.
No, but what did affect the markets apparently, Monday of this week was the Moderna trial vaccine study that was released from the first, I think they did it on 10 humans or something, right? Or something very small sample set, of course, right?
45 patients.
25, yeah, exactly. Moving into phase 2 and 3 going forward. But what is your take on this? Because I think by the time people will listen to this recording, it's starting to ebb off a little bit again, right? So any update from there?
Well, Monday was up a lot, like 25 percentage point. Yesterday morning, I was actually on Money FM and asked the same question to me. And my response the same, and today it has come to be materialized. So I'm going to just repeat my answers. What I said on Money FM yesterday was that, yes, it's only on 45 patients, too early to tell. But also pricing power. This vaccine, Gillette has already offered it close to free, right? And even if you are performing better, it's not like a normal medicine where you can price it ridiculously expensive. There's also government intervention, social pressure on this thing that I doubt the pricing power of the vaccine, right? So efficacy is in doubt, still early, pricing power unknown. It's just too much uncertainty to just based on the news and go and invest in the stocks of Moderna. And today has come in, reality has hit. So again, it's another example of how investors should not react to the near term and step back and start thinking more strategically, start thinking at least medium to long, right?
Yeah. No. Thanks, Freddy, for that. I think it's a good thing because these news items will be coming out from all kinds of pharmaceutical companies over the next few months, right? So it's going to be quite messy there until some, further along studies have shown some improvements. But let's go to the questions, I think, because we did get some interesting ones and we only have a limited amount of time every week. So the first one was from Sebastian. He said, hey, great new strategy. So I assume he's referring to our reoptimization that we have done last week, towards the end of last week. He is just wanting to understand because he thinks most of the portfolios, right, contain a lot of growth and the China Tech ETF, right, some more small cap. So what is our view on growth versus value over the next few years, and how do we look at that?
Well, it's a great question in the sense that given the market crash based on an extreme independent event, the value versus growth debate comes back. A lot of things are looking cheap now, but doesn't mean we want to get in there. For example, energy is cheap, but the devastation there in terms of credit impairment, amount of bad debts and non-performing loans incurred by the banks there is going to just sort of temper in terms of lending in the sector, right? So that's not going to change quickly. So it could be a value trap given the way the nature of the crisis has unfolded. Airline, for example, looks cheap, obviously, but doesn't mean it's a great investment today, right? It's going to take a while to work itself out. So instead, we were focused more on innovations, technology that's less dependent on hardware, less supply chain disrupted. And so where also the China experience has shown a lot of resilience in the sector, right? So for example, China innovation as a sector during the whole COVID-19 crash picked the bottom. For the first time ever, it has actually dropped significantly less than the average stock market. The S&P was down 35 percentage points, picked the bottom. That sector is only down around 20 to 21%. It tended in the past to be way more volatile, but that has completely flipped around. So we have decided to invest in growth, but growth that has demonstrated a structure change where the COVID-19 has introduced a lot of these structural changes. And so we went into sectors where we think that they are going to be the leaders of tomorrow. So rather than thinking about value, which could be trapped, right? Value trap, we're trying to avoid value traps. We're trying to focus on investing in growth that's more strategic for the future. So that would be my answer for now.
Yeah, no, thanks, Freddy, for that. I think Sebastian and a lot of people will actually have that on their mind as well. So that's good explanation there from you. Thanks, Freddy. The other one was from Junyan, and he says, thanks for the updates. Here's a quick questions in regards to the growing trade tensions. And I think this is what we a little bit discussed early on, but it's ramping up a little bit, right? Some folks on the Trump administration said the Chinese sent planes on purpose with people with COVID to the US, right, to infiltrate the virus. So he is saying that investors are moving their investments away and invest more in Chinese stocks from the US markets, right? However, the US has limited American investment into Chinese stocks, right? Because there was always that no foreign investors can, buy themselves into the system. Is China going to open up their market and invest more coming in? And what's our view about that?
Okay, first of all, good point. Trump has exerted pressure on certain pension funds, endowment funds but constitutionally he can't say you can't invest. But because of the pressure and the optics, some of the pension funds in the state government system, they actually refrain from going to China. As you knew, the MSCI World Equity Index rebalanced and it started including China in a more serious manner, but they halted that rebalancing. That is only one example or two examples. Constitutionally, it's hard to see a president able to exert pressure on all funds not to invest in China. Two, if he's able to do so, is great because there's less competition in terms of other money coming in to bid the the sector that we like up a lot and that we have no chance to get into. So it doesn't matter whether somebody's buying it today or not, as long as it's a great sector, has great potential for the future. If you're not buying it today, you give me more room and time to do so. So strategically, it's actually good news for the rest of the world that you're not chasing the same return, right? But then to answer the second part of the question is China going to open up their markets and let more investment come in? They have done so on paper. They have allowed a lot of international banks to start doing JV where they are allowed to have more majority stakes. A lot of companies are applying now. But again, given at this stage that the Chinese domestic competitiveness is up, these firms are belatedly, they've been held back for the last 10 years at least, right, until today where they can go in freely, more freely. At this stage, the Chinese can compete. So there's actually no harm and no qualms about letting foreign competition come in, because at this stage, the domestic names have a lot of advantage. So in reality, it wouldn't really matter. It probably will help China regain extra market share in terms of reserve currency status. It's part of the plan to really ramp the volume up there. The digital yuan is the other effort. So it's all very consistent, part of the whole holistic strategy. China is looking ahead 5 years and 10 years out, right? So these are not market impacting development, but it would probably justify the greater market share any world indices is dedicating to China going forward. So it is welcome.
Yeah, no, thanks, Freddy, for the answer. Very good point of view too, because this is not something that's discussed too much, but I know some of the big US brokerage firms like Morgan Stanley, Goldman Sachs, they're all trying to get in as well now that it's been up on the open. So thank you all very much for those questions. Thanks, Freddy, for all the answers. I do want to mention a couple very, very exciting webinars that are coming up in both Singapore as well as in Malaysia. In Singapore, we have an Ask Me Anything on reoptimization of your portfolios. I assume that's with you, Freddy, right?
Yes.
That's actually going to be on the 21st of May, 7 to 8:30. Sign up on that via our websites, on our Academy page or Eventbrite Facebook page, wherever you can find us. I think the links will be also posted in the comments below. And then we have another one where we actually have our friends from BlackRock, specifically from the iShares ETF division, join us, and it's going to be a fireside chat on investing with ETFs. That is actually going to be on the 28th of May, so next week, 7 to 8 as well. You can find that again on our website as well as on all the other social channels. And for our Malaysian customers and listeners, we have an inside look into the StashAway app and the StashAway as a company. That is on the 27th of May. So again, feel free to sign up with that on our Malaysia website and all the other channels, as well as the link in the comment section below. With that being said, Freddy, again, hey, thank you so much for having you again here live with us. We're looking forward to hearing your feedback and questions again, so that we have more answers for you over time. Thank you so much, and we'll be with you again next week. Bye-bye.
Subscribe to our YouTube channel to get notified whenever we have new content out for you. Also, don't forget to download the StashAway app. It's available in the Apple App Store as well as the Google Play Store, so you can start on your financial journey right now.